Well, Feyisike Ilemore, an analyst at ARM, joins me now to review the half-year numbers of the consumer goods sector. Thank you so much for joining us on the show, Faye.
Thank you.
Right, Nigeria's consumer goods sector, what do we not know about that space? It was pretty bloody for that sector last year.
Yes.
Taking a look at comparisons with this year, are we getting any better, or is it just pretty on paper?
I think it's getting better for some companies, but not better for some other companies. Okay. For the multinationals, particularly Unilever and Nestle, they reported stronger earnings in their H1 2018 results. It was largely driven by revenue. Revenue was up, and they also reported a slower rise in their cost of sales. That more or less reflected what we are seeing in terms of FX. Yeah. FX is now more stable, and you know these companies import around 50% of their raw materials. So last year, this was a lot of pressure for them. They couldn't get FX to import, and we saw that impact on their earnings. But this time around, due to the improved FX stability, they've been able to bring in their raw materials at a cheaper rate, and we saw that benefit earnings. In terms of revenue, both of them grew revenue, as I mentioned, around 12% on average. And from our own checks, it seems like they grew volume around mid-single digit. And I think, to me, it seems like consumer spending is picking up. And that also reflects what we are seeing in the economy. GDP growth has been strong in the last 2 quarters, and I guess that's now reflecting in consumer income, and probably that also supported demand for their products. Also, something that was common to those companies was finance costs. Finance cost was low for Nestle and Unilever, particularly Unilever. So if you remember last year, I think around Q3, Unilever raised money from the capital market. They raised about 57 billion naira, and they planned, well, the plan was to use some of the proceeds to reduce their foreign currency debt, and that's what they did. As a full year, that had reduced to about 4 billion, and now is around 650 million. So that's basically supported finance costs and also supported earnings. You know, I mentioned that some companies did well, some did not. I
was actually going to come back to that to say, it almost seems as if the government, had actually corrected some of what played out last year. I mean, you pointed out to that, the fact that it's actually easy access to foreign exchange, getting the materials they also want for production and whatnot. So I guess a question of strategy employed by each of these companies right now to get their numbers up. What kind of strategy do you think played out behind the scenes? I mean, for those who did not do so well.
For those who did not do so well, I think it was peculiar to them. Now, Dangote Sugar reported weaker earnings in their H1, but that was because of what's currently happening in the sugar industry. So right now we are seeing smuggling of sugar, and I think it's actually due to the fact that FX is now more stable and more available. So we are seeing a lot of, we are seeing the influx of cheaper refined sugar into the market, particularly in the northern area, and that is impacting on their market share in that segment. I guess any volume improvement or any volume recovery will be dependent on if the government can curb this smuggling activity. And in terms of price, Dangote Sugar cannot really compete price-wise with this smuggled sugar because, these products are coming in through the back channel and they bypass duties and levies, which they should normally pay if they were importing it through the right channel. And Dangote Sugar, the process is that they bring in raw sugar and they convert it to refined sugar. So this raw sugar they bring in, they pay a duty and a levy on that. So because of this duty and levy that they pay, that these smuggled sugars do not pay, they cannot bring down their price to a level lower than the smuggled sugar, and that's why they're losing market share to them.
Well, that kind of says a lot about what's really happening at our borders. Just exactly what I was discussing with the former guest, the previous guest, who was just saying where you are at the moment. Talking about the mining sector as well, and the fact that we still have people, of course, importing some of these minerals and also exporting illegally from our borders as well. Not sure how the Dangote Sugar is really going to handle this, because, I mean, this is clearly the role of the government to come in to police the borders.
They cannot do anything about it. It's left to the government and other regulatory authorities to come in and curb that activity. It's not even just sugar. So many products are being smuggled. And I think the FX has a lot to play with this influx that we are seeing.
So I guess FX stability has its downsides.
And its upsides
as well. I mean, this is something we all, wanted and prayed for. But let's talk us through what you think really played out with Nestle and Unilever.
Okay, so Nestle, as I mentioned before, it was majorly due to revenue. Revenue was up, particularly due to volume. They grew volume mid-single digits.
Was it the same thing for Unilever?
Yes, they also grew volume, and I think it speaks to their strong products. I guess consumers are very loyal to their brand. and they also have a very strong route to market, so they're able to penetrate many areas in Nigeria, and they also have a very strong distribution network. So I guess that's what's played out for Nestle and for Unilever. For Dangote Sugar, I guess they will have driven volume, if not for this pressure that they are facing from smuggled sugar. Well, I forgot to mention flour mills. Flour mills' story was more of price cuts. Okay. They actually cut prices on their flour and their sugar products, but they were able to grow volume for fertilizer, and of course we're in the planting season, so it's expected that fertilizer will grow. But in terms of flour, sugar, they reported weaker volume. I guess they're facing a lot of competition, despite the fact that they cut prices. We did not see any improvements.
Let's get an outlook. How do you see this playing out in the next quarter?
For Dangote Sugar, I think over the rest of 2018 is going to be weaker. As I mentioned before, any improvements in volume is dependent on what the government does to curb this smuggled sugar. If what is currently going on is still playing out, then we'll continue to see weaker volumes, and they might have to continue to cut prices. So they are losing on price, they're losing on volume, so revenue will be weaker. But the positive thing for them is that raw sugar, they import their raw sugar and convert to refined sugar. In the global market, the price of raw sugar has fallen to, I think, almost a 3-year low. So that's a good thing. But because of this weak revenue, they cannot, still drive earnings growth. So we're expecting weaker earnings for Dangote Sugar. For Nestle and flour mills, Nestle and Unilever, we're actually positive on those companies. As I mentioned before, they have a very strong distribution network in Nigeria, and their volumes are, their products are actually something that consumers like, and because of that they are loyal to those brands, and so we expect them to continue to drive earnings growth in 2018.
Well, I'm just hoping that generally, all the results put together, because reports I read this morning talk about the fact that it's actually putting a dent on this whole economic recovery for Nigeria in terms of the results we have seen so far. We're hoping that the results we see going forward really will shake things up for the better. Thank you so much, Feyisike Ilemore, an analyst at ARM.